Almost every successful trader you know once lost consistently. This isn't a feel-good slogan or some motivational cliché. It's the uncomfortable, unglamorous truth about this profession. The traders posting six-figure P&L screenshots, the ones you admire for their composure and precision, they all have a graveyard of losing trades in their past. Many of them have blown multiple accounts, made reckless decisions, and stared at their screens, wondering if they were cut out for this at all. Here's the problem. Most new traders see losses as a verdict, not a lesson. They believe losing means they lack talent, intelligence, or the trader gene. The moment they string together a few red days or blow up their first account, they start questioning their identity. Maybe I'm just not built for this. What they don't realize is that the early losing phase isn't evidence of weakness. It's a rite of passage. You're not failing because you're hopeless. You're failing because you're human. And in trading, human instincts are the enemy. That's where the mindset trap comes in. It's not the lack of strategy that buries most traders. It's the psychological wiring that turns the market into a mirror for their worst impulses. You start a position and watch the price tick against you. Suddenly fear hijacks your plan, and you exit early, missing the reversal. You win 3 trades in a row, now overconfidence pushes you to size up, only to take a loss big enough to wipe the gains. You're stuck in this emotional loop. Fear makes you miss opportunities, greed makes you overreach, and ego makes you break your own rules. The mindset trap is so powerful because it feels invisible while you're in it. You think you're making logical decisions, but in reality, your brain is being hijacked by primitive survival instincts. The market doesn't reward instincts. It rewards discipline, patience, and emotional control. And here's the paradox. You can't develop those qualities without first suffering through the very mistakes they're meant to prevent. But here's the good news. This trap isn't a life sentence. Every great trader eventually learns to rewire their reactions, to see losses as feedback instead of personal failure, and to treat trading as a skill-based business rather than a high-stakes gamble. The real breakthrough doesn't happen when you find the perfect strategy. It happens when you break free from the psychological patterns that keep you bleeding capital. And that's where the journey really begins. When you realize losing consistently isn't the end of your trading career, it's the doorway into it. Trading is magnetic. It pulls people in with promises of freedom, the possibility of fast money, and the dream of becoming your own boss. You see the allure in every social media post. A trader working from a laptop on a beach, flipping small accounts into huge balances, living without alarm clocks or bosses. For many, it's not just about the money. It's about self-mastery. The idea that through trading, you can conquer your fears, sharpen your mind, and control your financial destiny. But the reality is far less glamorous. The markets are not a charity, and they're certainly not a slot machine with a get-rich button. They are designed structurally and psychologically to extract money from the impatient, the undisciplined, and the overconfident. Every tick, every candle, is an opportunity for the market to test you. If you lack patience, it will bait you into overtrading. If you lack discipline, it will tempt you into breaking your rules. If you let your emotions lead, the market will bleed you until you have nothing left. This is where most beginners make their first critical mistake. They believe the challenge is primarily technical. They spend hours hunting for the perfect indicator, backtesting systems, and watching tutorials on chart patterns. And while technical knowledge is important, it's not the battlefield where most traders lose. The real war is fought in your own head. Your ability to stay disciplined when tempted, patient when bored, and calm when chaos hits. The mental demands of trading are underestimated because they're invisible in the beginning. You can memorize candlestick patterns in a week, but mastering the ability to hold a winning position without fear or cut a losing position without hesitation, that can take years. Markets don't just move prices, they move emotions. And if you don't know how to manage yours, you'll find yourself sabotaging your own trades over and over again. Losing, then, is not a verdict, it's tuition. It's the cost of gaining the emotional maturity and mental toughness that separate professionals from amateurs. Every losing trade is a teacher. Every blown account is a seminar in risk management. The traders who survive long enough to get it are the ones who stop treating losses as personal failures and start treating them as part of the curriculum. The harsh truth is this: trading will break the impatient and reward the patient. It will punish those seeking instant gratification and quietly prepare those willing to endure the grind. Your job isn't to skip the learning curve, it's to survive it. And survival begins when you accept that losing is not the end of your journey, but the beginning of your education. If you ask most struggling traders why they keep losing, they'll often point to external factors: market manipulation, bad luck, wrong strategy, poor timing. Rarely will they admit the deeper truth. Most losses come from psychological traps, not technical failures. This is the mindset trap, a collection of mental habits and emotional reflexes that quietly sabotage you long before skill has a chance to save you. The mindset trap starts subtly. You learn a strategy, you backtest it, and you believe you're ready. Then your first few trades don't go as planned, and fear takes over. You close positions too early, cutting winners before they have time to grow. Next, you hit a few wins in a row, and suddenly your confidence flips to overconfidence. You start increasing position sizes without proper risk controls, thinking you've figured it out. One bad trade later, you're right back at zero, wondering what happened. Some of the most common traps include overconfidence. After a few wins, you mistake short-term luck for long-term skill, leading to oversized positions and reckless decisions. Fear of missing out, FOMO. You chase entries late, convinced you're missing the big move, only to buy tops and sell bottoms. Revenge trading. One loss turns into an emotional mission to win it back, often doubling the damage. Analysis paralysis. You overthink every setup, second-guess yourself, and miss opportunities altogether. These patterns don't just happen once, they loop. Overconfidence leads to overtrading. Overtrading leads to losses. Losses trigger revenge trading. Revenge trading leads to more losses. Eventually, you feel trapped in a cycle you can't escape, not realizing the market isn't your enemy, your own reactions are. The reason the mindset trap is so dangerous is because it feels rational while it's happening. Fear tells you, it's smart to exit now before the market takes more. Greed tells you, this move is too good to miss, just one more trade. Ego tells you, you can't let the market make you look wrong. All of these sound logical in the heat of the moment, but they're emotional impulses wearing the mask of reason. Breaking free requires more than just technical skill. It demands self-awareness. You have to catch yourself in the act, recognize when emotion is making the decision, and consciously shift back to process-based thinking. Until you do, even the best trading system will fail in your hands. Here's the paradox. Most traders only recognize the mindset trap after they've been caught in it for months or even years. But the moment you see it for what it is, you stop fighting the market and start mastering yourself. That's when the real progress begins. The mindset trap doesn't exist in a vacuum. It's powered by deep-rooted emotional biases hardwired into the human brain. These biases evolved to help us survive in the wild, but in the markets, they're financial poison. They distort our perception, cloud our judgment, and push us into decisions that make perfect emotional sense, but destroy our trading accounts. Here are the most dangerous culprits. 1. Loss aversion, the pain that makes you break your rules. Human beings hate losing far more than they enjoy winning. Psychologists estimate that the pain of a loss feels about twice as strong as the pleasure of a gain. In trading, this means you'll often close winning trades too early, locking in small gains just to avoid the chance of them turning into losses, while holding on to losing trades too long, hoping they'll come back, so you can avoid the pain of admitting you were wrong. It's like cutting your flowers and watering your weeds. 2. Confirmation bias, seeing only what you want to see. Once you have a bias about where the market is headed, your brain will subconsciously filter information to confirm it. You'll seek out news articles, chart patterns, and opinions that support your position, while ignoring or dismissing evidence that contradicts it. This bias blinds you to reality and turns what should be a neutral analysis into emotional self-reassurance. 3. Gambler's fallacy. The market doesn't owe you a win. After a string of losses, Many traders believe they're due for a winning trade, as if the market keeps a scoreboard. This is the gambler's fallacy. The same thinking that makes a roulette player bet heavily on red because black has hit 5 times in a row. The market doesn't remember your trades, and it certainly doesn't compensate for your past misfortune. Thinking it does leads to oversized bets and emotional meltdowns. 4. Overtrading, mistaking activity for progress. Some traders believe more trades equal more opportunities, but in reality, more trades often mean more exposure to emotional mistakes. Overtrading is usually a mask for boredom, FOMO, or a need to feel in control. Instead of being patient and selective, you start chasing every micro move, draining both your account and your mental capital. These biases aren't just bad habits, they're part of human nature. The market is a testing ground that exploits them relentlessly, like a chess opponent who knows every weakness in your game. Unless you actively recognize and manage these biases, they'll keep you trapped in the same emotional cycles that sink most traders. Mastering the markets, then, isn't just about learning setups or indicators. It's about rewiring your mind to see reality clearly and act with discipline despite the pull of your instincts. And once you can do that, you've taken the first big step toward escaping the mindset trap. Every trader dreams of reaching the point where the market finally clicks, where decisions feel clear, discipline comes naturally, and profits begin to grow consistently. But before that breakthrough, there's a brutal, humbling stage that almost no one escapes: the before they win phase. This is the season of repeated mistakes, emotional whiplash, and account drawdowns that make you question why you ever started trading in the first place. It's tempting to see this phase as proof you're not cut out for trading. In reality, it's the proving ground. Just like a muscle needs resistance to grow, your trading mindset needs stress, failure, and discomfort to develop resilience. The market is your coach, and it's a tough one. Why is this stage so important? Because the lessons that turn you into a consistently profitable trader aren't learned during your wins. They're learned during your losses. Discipline is forged in pain. It's one thing to say, "I'll cut losses quickly." It's another to experience the sting of ignoring that rule and watch a small loss turn into a disaster. The emotional pain becomes the anchor that keeps you disciplined next time. Pattern recognition comes from mistakes. You start noticing that every time you trade in the middle of the night out of boredom, you lose, or that chasing big green candles often leads to reversals. These insights aren't theoretical. They're tattooed into your memory by your own costly errors. Ego has to die before consistency is born. The market doesn't care who you are, how smart you think you are, or how confident you felt when you clicked buy. Until you release the need to be right and replace it with the need to follow your process, you're still playing a losing game. Consider the story of countless successful traders who took years of losses before seeing consistent gains. They didn't survive because they were naturally gifted. They survived because they treated each loss as feedback. Instead of blaming the market or abandoning the craft, they adjusted, refined, and evolved. The turning point often comes when traders stop chasing perfection and start focusing on execution. They accept that losing trades are part of the business, just like expenses are part of running any company. This mental shift changes everything. Risk management becomes second nature, emotional swings flatten, and trading becomes a calm, calculated operation rather than an emotional roller coaster. The before they win phase is not a detour, it's the main road. Those who try to skip it, looking for shortcuts, almost always circle back to it in failure. Those who embrace it emerge with the scars, patience, and clarity needed to survive long-term. In short, you don't get around the losing phase. You grow through it. And the faster you accept that, the sooner you'll step into the mindset that separates survivors from casualties in the trading world. Breaking free from the mindset trap isn't about eliminating emotion. You can't. You're human. The goal is to manage those emotions so they no longer dictate your trading decisions. This is where most traders pivot from chaotic, reactive behavior to disciplined, process-driven execution. Escaping the trap means rewiring the way you approach the market. 1. Shift from outcome focus to process focus. Most traders are obsessed with the scoreboard, daily P&L, monthly returns, win rates. But when your self-worth rides on short-term outcomes, every trade becomes emotionally loaded. The fix? Start focusing on the process. Was your trade plan solid? Did you follow your rules? Did you execute without hesitation or revenge? If you measure yourself by execution quality, the profits will follow naturally. 2. Journal relentlessly. Your brain will lie to you after a trade. It will downplay mistakes and exaggerate good decisions. A trading journal is your truth serum. Write down why you entered a trade, where your stop is, your emotional state at the time, and how you managed it. Over time, your journal reveals emotional patterns that are invisible in the heat of the moment, like noticing you take riskier trades after a win, or that you hesitate more after a loss. 3. Treat risk management as your psychological armor. Most emotional trading mistakes come from risking too much. When you trade oversized, every tick feels like a threat, and you'll break your rules just to escape the discomfort. By keeping risk per trade small, often 1% or less, you create emotional breathing room. Suddenly, a losing trade is just a scratch, not a stab wound. This lets logic, not panic, guide your decisions. 4. Practice delayed gratification. Trading success compounds like interest. One of the deadliest traps is trying to speed up your journey by forcing bigger wins. Instead, aim for consistent singles instead of home runs. Learn to let your edge work over hundreds of trades, not just a handful. The patience you build here isn't just good for trading. It changes how you approach every high-stakes decision in life. 5. Think like a business owner, not a gambler. Gamblers think in terms of luck, hot streaks, and big swings. Business owners think in terms of process, risk control, and sustainability. When you shift your identity from someone trying to win trades to someone running a risk-managed business, your entire behavior changes. You start protecting capital the way a shop owner protects inventory. You stop trading for excitement and start trading for longevity. Escaping the mindset trap doesn't happen in a single epiphany. It happens trade by trade, journal entry by journal entry, rule by rule. At first, it feels like restraint, like you're holding yourself back. Then one day, you realize the restraint is the freedom. It's what keeps you in the game long enough to actually win. When you finally break free from the mindset trap, trading stops feeling like a daily battle and starts feeling like a practice craft. The noise in your head quiets down. The endless tug-of-war between fear and greed loses its grip. You no longer obsess over every tick in price, you focus on the bigger picture. This is the winning mindset. 1. Patience becomes your edge. The winning trader knows the market is an infinite stream of opportunities. There's no desperation to take this trade because another one will come tomorrow, next week, next month. Patience means sitting out when conditions aren't right, even if it feels boring. In the past, boredom might have driven you to force trades. Now, you see inactivity as a form of control, a profitable decision in itself. 2. Emotional neutrality. In the winning mindset, wins and losses carry the same emotional weight. Almost none. A win isn't a cause for euphoria, and a loss isn't a reason for despair. They're simply outcomes of a process you trust. This neutrality doesn't mean you stop caring about results. It means you stop reacting to them in ways that sabotage you. 3. Long-term thinking. Amateurs think in days. Professionals think in years. A losing week means nothing if the yearly equity curve is trending upward. With the winning mindset, you stop needing to be right on every trade, you just need to execute consistently over time. This zoomed-out perspective keeps small setbacks from shaking your confidence or derailing your plan. 4. Acceptance of uncertainty. The winning trader fully accepts that they will never know what the market will do next. There's no magical setup that guarantees a win. Instead of chasing certainty, you work with probabilities and risk controls. Every trade is just one hand in a long game. You manage it, play your edge, and move on without emotional attachment. 5. Detachment from ego. The market isn't a place to prove you're smarter than everyone else. The winning mindset sheds that need entirely. You're not here to win against other traders. You're here to execute your plan, protect your capital, and compound your account. Your ego has no place in that mission. The most surprising part? Once you reach the winning mindset, trading becomes simpler. Not easier, because the work and discipline remain, but less mentally draining. You spend less time fighting your own impulses and more time letting your process do the heavy lifting. And perhaps the greatest irony: once you stop chasing profits, they start coming more consistently. Because in the end, the real edge isn't a secret strategy. It's the trader you become in the process. If there's one truth every consistently profitable trader eventually learns, it's this: losing isn't the opposite of winning. It's the path to it. The early stages of your trading journey aren't designed to reward you. They're designed to shape you. Every loss, every blown account, every frustrating day where you did everything right and still ended red, those aren't signs that you're failing. They're the market's way of testing whether you have the patience, discipline, and humility to survive long enough to actually win. The traders you look up to didn't bypass the pain. They didn't stumble on a magical strategy that worked from day one. They walked through the same minefield you're walking through now. Trigger-happy entries, oversized positions, revenge trades, sleepless nights. The difference is they learned from each scar instead of running from it. The mindset trap we've talked about, the overconfidence, the fear, the emotional biases, these aren't obstacles to avoid entirely. They're rites of passage. The market will expose them in you, and in that exposure lies the opportunity to change. It's only by facing these flaws head-on that you develop the discipline to protect your capital, the patience to wait for your setups, and the emotional neutrality to execute without hesitation. When you stop fighting your losses and start studying them, you unlock the real shift. Losses become feedback, not personal failures. Risk management becomes your shield, not an afterthought. Process becomes your focus, not profit. From that moment on, you're no longer gambling, you're operating a business. You're thinking in probabilities, not certainties. You're measuring success in years, not days. And that's when the curve starts to bend in your favor. So here's the paradox to remember. In trading, you often have to lose before you can win. The market has a way of breaking you down, stripping away your bad habits and ego, and rebuilding you into someone who can operate in this high-pressure environment with clarity and confidence. The only real question is whether you'll endure the losses long enough to get there. Because in the end, consistent profitability isn't about finding the perfect trade. It's about becoming the trader who can take the imperfect ones and still come out ahead. And that transformation begins the moment you stop seeing losing as the end and start seeing it as your greatest teacher.